In this second video, now that we've looked at the role of enabling conditions, governments, and institutional innovation, we're going to look at where the money comes from. And actually, to answer that question, how do we deal with the climate crisis? Where is the money going to come from? The first thing we can do is step back and actually look at the overall field. It's very important to step back and look at the overall field because our economy generates a huge amount of resources every year. It's an economy that generates about $85 trillion worth of economic activity every year. It's growing around 3%, 4% on a global basis. It's consuming around 90 billion gigatons of raw materials every year. And every year of that $85 trillion, a large quantity is rolled back into investment every year. So we're constantly updating the capital stock. That means all the buildings, infrastructure, roads, bridges. Every year between 20 and 30% of global GDP, so we're talking about $20 trillion a year, is being invested. So when we start talking about the gap, there is a gap. It's estimated between 3 to 5 trillion, depending on who you talk to. Our friends at UNCTAD, the UN Conference on Trade and Development, estimate an SDG gap, a Sustainable Development Goal gap, of 2.5 trillion a year. But put that into perspective, that's 10% of what's being invested every year on average. So there's a huge pile of money out there that's going the wrong way. And that's an opportunity because all we need to do is shift the way it's invested. Now, the other thing that I like to think about when I think about the challenge of the climate and how to finance it is the overall stock of wealth that is available to us. $85 trillion economy, $20 trillion invested every year. And if you look at financial assets globally, they're between $200 and $300 trillion. $200 to $300 trillion. It's a huge amount of wealth and it's money in the bank because we've worked hard, we've saved. Most people save between 10, 20, 30% of their paycheck. And as a society, we do that. That's why we have those $200 to $300 trillion. Now, when you talk about the needs for financing this $2.5 trillion gap or this clean trillion that's needed for the energy transition, put that into perspective. It's not as big as it seems, but the rules of the game are hugely important because every year 20 trillion are being invested into roads, schools, hospitals, and other things that we need, but might not be climate resilient or might not even be good for the climate because of price distortions. Why do we have fossil fuel subsidy reform? Fossil fuel subsidies of around $300 to $500 billion every year when we know we need to phase out fossil fuels. So these are some very simple questions that confront us when we're thinking about climate finance. We know because of those who track climate finance, it's grown from a very small amount to almost 500 billion US dollars every year. And the reason the money is flowing, I would say, is for two reasons. One is because the market's shifting that way anyways, and we'll talk more in the next module about what the private sector and the financial sector can do to increase that. And the other reason is because of prods from government. In other words, governments, through their policy measures, like establishing the Green Climate Fund, are also injecting resources into those actions that can help solve the climate conundrum. The interesting thing here is a lot more finance is rolling into mitigation, stopping the CO2 flow, than it is to adapting to a world which is more climate unstable. And that's a whole nother challenge because we know that those who are most vulnerable to a changing climate are those who are least able to protect themselves. How do you move from the billions that the banks can lend to trillions? And the fact of the matter is that a lot of the resources are generated within individual economies. So, for example, India has almost a $3 trillion economy now. And so a lot of climate finance is domestically mobilized for domestic purposes. And that's sort of the way the future will be. Remember that 20% of GDP that's being invested every year? That's more or less being generated by every country to invest in their own infrastructure. And very little is actually being transferred across borders to invest in other other countries' adaptation or other countries' mitigation. And the interesting thing is, in recent years, money from the South, from China and other parts of the global South, are now as big as or bigger than money that's flowing from OECD countries into climate finance. I want to give you an example of a small country that's done amazing things in terms of stewarding its land, but also generating resources for the people who steward its land, which in turn conserves the CO2 where it belongs, the carbon in the ground. And the country is Costa Rica, and it's a small country in Central America. And what they've managed to do over the past 30, 40 years is completely repopulate their forested area. It used to be fairly heavily deforested. They've slowly repopulated, reforested their country. And the way they've done it is by policies which said, if you protect your forested land, you will get a payment for the service that your land provides. Because when you have forested land, it not only sequesters carbon, CO2, but it also regulates water and contributes to microclimates. And it's also a great resource for tourism as well, which is another one of Costa Rica's major sources of revenue. So some forward-looking policy by a very small country, Costa Rica, which has done big things and could be replicated on a much larger scale. We have a lot of innovation around Europe, United States, China, other places with carbon trading schemes, carbon pricing, but we don't have a stable and reliable fiscal revenue mechanism. We don't have a single fund that's receiving the price differential from the price correction of carbon being underpriced, and actually feeding that back into corrective elements like mitigating CO2 emissions or adapting to CO2 emissions. The Green Climate Fund, which was specifically created from the Paris Agreement in 2015, could be that mechanism. It has a target of reaching $100 billion a year of lending for climate purposes. And to reach that 100 billion target goal, it could become that fiscal revenue mechanism.